So how can you build passive income with real estate investing? It's my favorite subject, so let's dive right in. So how can you make real passive income doing real estate investing? Is it even possible? Is it even really passive? You know what? That's the thing that gets asked so often, and I want to dig in deeper to show you how that's actually possible, where you can be more of a hands-off investor and make great passive income with real estate. And here's how you can do it. All right, so the first thing you need to do when you start doing this is, first, is it possible? Yes, 100% it is possible. You can create passive income with real estate investing. Now, the best way to do that is you got to start building your network, right? You got to start understanding who are the people out there I could put my money with. Because the truth is, one, you got to have money, and the more you have, the better. Because if you're going to be passive, your money's got to be the one working for you. If you don't have money, you will be working for it. Right? This is why there's so many active real estate investors. Real estate investors that might be out there doing fix and flips, and even then they might need some capital, some cash to be able to do that. Maybe they're doing wholesaling, which is a business you can do with very little money out of pocket, right? There are ways to do that kind of stuff. You can even work for those kind of companies or for those people and start to build up your cash. But if you want to be passive, you've got to have the capital to do it. Your money is the one that has to do the work, because your money is the one going to those active investors to do the work for you. There's no secret where you can just have no money and you can just have money just make little babies for you and you do nothing for it. That does not exist. That's a sales job. If you've been sold that, it's not real. It does not exist. That's just like with the people that tell me all the time, you know, they're like, hey, Chris, and by the way, they're always in Utah for some reason, but they're like, hey, Chris, I found these options trading company. They'll pay me 10% a month. And I'm like, and you just lost your money. It's gone. You know, even if they're legit options traders, one, they can never sustain that kind of return. Two, guess what? The SEC always shuts them down anyway, so you're going to lose all your money. So get out if you can get out, you know. There's nothing you can do that you can just be fully passive, just make money off of and do nothing, right? It's not the law of the harvest. The law of the harvest means that you sow what you reap. You've got to reap something. So for you, your first step is, one, have the cash to help do some of that reaping, you know, so you can actually start sowing with it too. And then two, then you got to start building your network. Because as you have the cash, now you got to start finding the people you can put the money with. This is a very sacred obligation, in my opinion. This is something you got to take very seriously. This is why you got to learn how to do proper due diligence. You know, I've done another video where we talk about due diligence and the questions to ask. You know, I'll just give you a few simple ones. For example, one is Google them. You know, Google their name plus scam, their name plus review, and I mean the company name even, things like that. Did they have another company before this? You know, I didn't catch this myself, but there was one friend of mine that was doing real estate investing. Now, I didn't put any money with him, and I didn't recommend our clients do anything with him, but I knew a lot of other friends that had money with this guy. Now, this guy was like seemed like the nicest guy in the world. Everybody seemed to love him, right? Like, seriously, I couldn't find anybody who hated the guy because he was just such a nice guy, very positive, very spiritual and everything else, very faith-based. Well, lo and behold, I find out just randomly, one day he decided to take off with about $26 million of investors' money. Gone. And I remember like pretty soon after that happened, some people started to do some digging, and what did we find? We found out he's got this criminal record from 15, almost 20 years ago, literally was thrown in jail for stealing. You know, now it wasn't the same exact deal, the same kind of thing, but still you're like, wait a minute, why not learn about this? Now I'm all about forgiving people and I know that people can turn their lives around, but that would have been useful research that I should have done, but I didn't, you know, because I knew the guy personally. I knew him for years. And fortunately, again, neither I nor my clients had money with him, but there was a lot of other people that did because, again, they trusted the character of the person. I'm all about character. Character is so much more important to me than just their experience. In fact, I don't even mind if people lost money in the past. I love it, in fact. I made a guy nervous on my podcast here recently because he's like, I really want to talk about all my failures. I'm like, no, we want to hear your failures because that's how we get trust. It's not just the fact that you've been investing, it's you've invested during hard times. You had to come back from it. Maybe you had to learn a big lesson that now you invest differently because of it. The people that worry me the most when I do my research are the ones that don't have a lot of experience. The ones that have been around since 2022, 2018, because everybody made money in real estate in 2018. It wasn't hard at all, right? You know, I want to know, like, how long have they been around? What have they experienced? What kind of things have they learned, the lessons along the way? What kind of ways did they screw up and make mistakes so that now they're a wiser investor and a better steward of the money that I'm stewarding to them? That's what I'm looking for. So that's where you want to make sure that when you're looking for these people, what kind of experience do they have? How long have they been in this game? Personally, I like to see at least 12 to 15 years. So I like to see that if it's been around 2010 or earlier, I feel much better. Now, more specifically, I want to know, are they in that same kind of investment? If they're in apartments now, have they always been doing apartments, or are they doing something else before? If they're doing self-storage, were they doing something before that? Like, I knew somebody who was in apartments that switched to self-storage. Well, I'm not going to have as much confidence because they just recently went to that space. I want to have my money be their guinea pig. Maybe you're okay with it, but I imagine if you're like me, you don't want to be the one that they're testing your money with, right? I want them to test their own dang money, or maybe their family's money, or whoever's willing to put their trust in them. Great, let them put their money at risk. I'll put my money at risk later on. So that's what I look for is, do they have experience doing the same kind of investments and in the same regions? If they're somebody who's like always done Atlanta, Georgia, for example, I don't want to have them go and buying properties in Phoenix, Arizona, because what if they go and try to do that? That's a different market, different demographics. Will they actually get the same results if they don't know the area as well? Do they have boots on the ground and that kind of thing? How are their finances? Do they have solid finances? Do they have good backing? Do they have a lot of money sitting in reserves? That's a very important thing to look for. So you got to make sure you're doing this due diligence, and this is going to be your biggest upfront work before you start passively investing. All right, so now you start to do that. Now it comes time to start investing, right? And of course, I haven't told you everything you need to do for due diligence. That takes a lot longer than just trying to talk in 10 minutes, right? I'm just giving you kind of a good flavor, taste from some of the biggest questions that I've done and things that have helped me out when I've done my own due diligence. Now, you can either use your own network and build that, or you can borrow somebody else's, like ours. Like that's what our clients will often hire us for, is they'll say, hey, if I can borrow your network, even though I know it's not guaranteed, but I know that you've done a lot of the research, I can do my own due diligence and it narrows my focus. That speeds up my time to get an investment. That's huge, right? So a lot of times people will hire us for that as consultants and help them strategize and figure out what are the better investments. Well, what are those investments that we'll talk about? For example, there are things like turnkey rentals. Now, turnkey rentals, I would say, is a little bit safer in the sense that at least you're the one that owns and controls the property. However, you also have a property manager, which is usually the turnkey company. That property manager is everything when it comes to real estate investing. You need to make sure you have someone who has a good, solid reputation. So that's something you can actually do. Now, right now, passive income's not great, but growth potential is great long term. For example, now passive income has been great with this particular property, but I have one in North Carolina I bought about 4 years ago. And that property's been consistently kicking off about, now it's built up to around $500 a month. The down payment was like $27,000, right? So I'm making a great return on that alone. Plus it also appreciated like well over $50,000. So that $27,000 now made over the $50,000, plus it's been cash flowing in total now over the last 4 years, probably in the ballpark of right about $15,000 to $20,000. So really a $70,000 gain from that $27,000 in just 4 years. Again, results vary, nothing's guaranteed, and in fact, I would not try to count on big appreciation in the future. I could be wrong, but I wouldn't count on the appreciation, it's the cash flow, right? So lots of ways to do that. So that's a good, solid option, especially if you want lower risk. Now, there could be more management, meaning you have to manage the property manager. But again, I generally speaking, I generally don't spend more than a few minutes a month, make sure that I manage and that things are going well. It's only when things might come up, certain situations. Now, sometimes just renewing the lease and they want to raise the rent, I might have to answer a question on that. It might be that there has to be a repair done that they want to get permission on first before they do it. But again, they're fielding all those questions. They're dealing with all the tenants and everything else. I'm not dealing with it. Now, other things I can do. Now, right now, this is the better cash flowing opportunities like lending your money. Lending your money, whether it be to a specific investment, like a specific property, you can lend your money to that and become the bank for that real estate investor where they do the renovations and fix up the property and sell it, and you get paid a certain return. Or you can go into a debt fund where maybe they're in multiple projects and that debt fund just kind of covers them all, and it gets a little bit more diversified, and you get paid, again, a certain interest rate. It could be 8, 9, 10, 11, 12% a year that they're paying you depending on the terms of that loan. And sometimes you don't have to keep changing it every 6 or 12 months. Sometimes you could be in a longer term, like 3 or 5 years, depending on what that situation is. That's where there's like different things you could be doing. There's even syndications. You can go and be equity partners in apartments and self-storage and car washes and heck, oil and gas and all that kind of stuff. You can go into partnerships. You can do franchise opportunities, although that could be more active depending on the kind of franchise you're doing, right? So you can be careful there. But again, if you're looking for passive real estate options, there are so many out there that you could be doing right now. I mean, even in commercial space or industrial, there's even industrial stuff like warehouses, because of Amazon, thanks to them, That's started to become a more profitable business in the last few years compared to self-storage, which is still overpriced and not really great opportunity right now. So there's a lot of different ways you can do that. The great thing is if you get your options narrowed, right, based on your goals, your timeline, the money you're trying to use, whether you're an accredited investor or not an accredited investor, those kind of questions can help narrow down the options to be more specific about what's going to be best fit. And that's often what we're doing with our clients too, is figuring out like, okay, your situation here, like you want cash flow now, well, let's not maybe do the turnkey real estate option yet, or maybe not currently, maybe we do that as a build out your portfolio, but maybe we focus on just this 12% fund that pays you 1% a month. Maybe we focus some on that. Maybe we look at something over here. Here are the people to talk to make it easy. Now you can do this all yourself. Obviously, if you're researching this, you can obviously DIY it and do your own research, or you can use somebody else too, right? But that's kind of the way to become a passive real estate investor. What worked for me, a client who had $1 million, he wasn't sure what to do with. He had it in mutual funds, but when the financial advisor says you only live on $30,000 a year, he said, well, heck with that. I don't want to be a millionaire living on $30,000 a year so I don't run out of money in mutual funds. I need this to generate income. And so when he got into different types of investments between duplexes, a couple duplexes that were turnkey properties, he did some things with apartment syndications. So he had money there. He had some money with oil and gas. And even though gas prices could fluctuate, his income was between like $100,000 to $120,000 a year from that $1 million, versus just $30,000 a year that he was making before. So you can create so much more income and become a passive real estate investor, again, being hands-off, managing it, being a wise steward of your money, doing the due diligence, but then you get to be hands-off. They do the active management while you take the returns. Again, it's not too good to be true because you do have to be someone who manages the investments, right? You do have to be someone who watches what's going on with your money. But it's not like you have to babysit it every single day. By the way, this is the same reason why I had a guy who owned a stock trading company. He taught people how to trade stocks and options. He came to us because he said, Chris, I'm sick and tired of managing my own trades. I have to at least go on the computer for a half hour to an hour a day. No matter what, wherever I am, I have to be on the computer. And now some people that seems like a dream because they're like, at least I don't have to go to the office 8 hours a day or more. But he's like, no, I don't have to be tied to something every single day. I have to always have my brain on for my trades. I want something that's more hands-off. I want to do real estate investing. Well, that's probably the same thing you're looking for as well. And real estate can be good if you're invested with the right people doing the right investments that are fit for your situation. Now, if you're curious about how much passive income you could create in your own situation, we actually have this passive income calculator on our website at moneyripples.com. You can actually put your numbers in. It takes a few minutes. It can actually give you a nice result to show you how much passive income you could create in the next 12 months with the cash that you already have or the assets you have that might surprise you. So go to moneyripples.com and see what your number is today.